Okay, so good afternoon. We'll be starting our today's class. We are on the topic security analysis.
Yes, sir.
Okay, security analysis. Some initial things we had already discussed by now. What is investment? What is the meaning of security? How investment is different from gambling? Investment is all these things you have discussed, the basic things. Is it?
Yes, sir.
So,
Yes, sir.
if that
Yes,
is
sir.
for today, we'll start with the concept of security analysis. What is security analysis that we'll be learning? So I'll go for screen sharing right now.
Yes, sir.
Just a minute. Let me know when screen will be visible to you.
Yes, sir. It is visible.
Yeah, it's visible now. Huh? Okay, so this is our second class. So we'll be starting with the topic
Yes, sir. Security analysis.
is shown to you. You know your class is being recorded. So introduction part is over. I had introduced you to the topic. What is financial asset? What is the meaning of securities? We have discussed and
Yes, sir.
technical definition of securities, which is provided under Section 2H of Securities Contract Regulation Act 1956, or we call it as SCRA. This definition also,
Yes, sir.
right? Yeah, these definitions I had explained you. Then, what is investment?
It
That
is the current commitment of money.
yeah, it is a commitment of fund for future expectation.
Yes, sir.
Okay, and we have seen there may be three objectives or three aspects which needs to be looked into
Yes,
in
sir.
investment decision:
Yes, sir.
security aspect, liquidity aspect,
Yes, sir.
yield aspect.
Yield.
When you say security aspect, what does it mean?
The certainty to get back the principal.
Yeah, so security aspect means we are uh, our focus is on the principal amount. That means we should not lose
Yes, sir.
principal. That is our focus. Okay, security aspect. Then liquidity aspect, what does it mean?
It is rate of encassable.
It is
Rate of
encashability. That means
encassable.
how quickly you will be able to encash
Yes, sir.
the
The
securities
security
into how quickly you will be able to convert your security into cash. And yield means
is defining the net income.
net income. So these are the three aspects which needs to be taken care of in every investment decision. The following slides explain you what is the meaning of security, what is the meaning of liquidity, what is the meaning of yield, all these calculations are made. Then we try to understand what is the difference between the meaning of investment and speculation. Can you
Yes, sir.
broadly tell me
Yes.
what is
Investment is generally is the current commitment of money to get return in future, but speculation is generally contain risk in a financial transaction, which gives us the substantial profit.
okay? So you can say all the other points also you can say speculation involves deployment of fund, but it's not backed by a conscious analysis. That means without analyzing in detail, without finding out what are the pros and cons, speculative
Yes,
decision.
sir.
Right? Whereas
Yes, sir.
decision is a kind of conscious decision. No, it's a
Yes,
conscious.
sir.
Okay. Okay. And there are various other points are also there which distinguishes investment from speculation. We had discussed all these points. Go through it. Then how investment is different from gambling, that also we had discussed in our
Yes, sir.
previous class. Several points we had discussed. Gambling is
Yes, sir.
normally it's a short-term plan. It's a
Yes, sir.
planned activity, you can say,
Yes, sir.
and this is based on some tips and remorse, whereas investment decisions are based on scientific analysis.
Yes, sir.
So this is what we had discussed. Up to this we had discussed. Is that?
Yes, sir.
We
Yes, sir.
had discussed. So this is basically we had created a platform so that we will be able to understand the concepts of security analysis. Today we will be entering into the security analysis part.
Yes, sir.
Okay. So
Yes, sir.
when coming to security analysis, that means here we are thinking about, we have understood the meaning of securities, right? Security
Yes, sir.
includes so many things here in this context.
Yes, sir.
Uh, Talking about debt securities or equity securities. And security analysis, the first part of investment decision process. First we'll be analyzing the security, then we will be taking investment decision. Is it not?
Yes, sir.
Security needs to be
Yes,
analyzed.
sir.
And to make that analysis, what is required is we need to do a kind of evaluation. We need to know what is the value of that security. I think last class you were asking what is the meaning of intrinsic value.
Yes, sir.
I had told you in appropriate time I will be explaining what is that intrinsic value. Okay, what is
Yes,
intrinsic
sir.
value? I am not still, uh, I'm not telling you right now. Just have an idea when you're trying to arrive at the value, or that means you can say what is the real worth, or you can say what should be the value. You try to calculate. Suppose there is an investment, there is equity share. What should be its value?
Yes, sir.
We'll be calculating that thing.
Yes, sir.
Right? That is first part. Okay. Because only when we know the value, then we will be able to compare it with the price.
Yes, sir.
So this investment decision process involves valuation and analysis. Both the things as
Yes, sir.
valuation and analysis. Right? So it is primarily concerned with analysis of security with a view to determine the value. Why we are analyzing? Because through that analysis, we'll be able to determine its value. Suppose let
Yes,
us
sir.
say particular security is sold in the market at 900 rupees. What is 900 rupees?
Yes, sir.
900 rupees is the market
That
price,
is market
not the
value.
market.
Yes, sir.
Okay, we'll be arriving at what should be its value. Okay. So on the basis of analysis of that security, we'll be able to determine the value of the security so that we'll be
Yes, sir.
able to take appropriate investment decisions. Okay.
Yes, sir.
No doubt, market has already placed a value. When you say price 900, that is market has placed a value of 900. Market is saying that is the value. That is market price. But value to
Yes, sir.
us is different.
Yes, sir.
So, to arrive at that value, or to continue the process of this security analysis, two approaches are normally followed. The approaches are called as, one is fundamental analysis,
Fundamental analysis.
second is technical analysis.
Technical.
You
Yes, sir.
can see in the picture when it comes to the fundamental analysis, the top part. Okay, there are three kinds of analysis we are talking about. Can you read them? What are these analyses?
Yes, sir. The first one is economy analysis. Second is industry analysis. Third is company analysis.
Okay, so that is one kind of analysis. And coming to technical analysis, what we do, we mostly rely on the historical data. On that basis, we try to find out the trend in which direction this particular market price is moving on. We try to find it out. Okay, so by analyzing the past, we try to predict the future. Okay, this is
Yes.
totally a different kind of technique, a different kind of basis to analyze the securities. Okay, we'll be learning
Yes,
both of
sir.
this
Yes,
one.
sir.
What is fundamental analysis and what is technical analysis. Now,
Yes, sir.
what is the basis of decision taking, or you can the decision making guidelines in the context of security analysis is that if the price of the securities in the market is higher than the intrinsic value, then you should sell the securities. And reverse, if the price is less, then you should buy the security. Are you getting me? Or should I explain you again?
Yes, yes, sir.
Here, at this stage, roughly you understand what is intrinsic value. Intrinsic value means what should be the value. Okay, what should be the real worth, what should be the value. Point is here is that if intrinsic value is more than the market price, suppose you are planning to buy a security and you feel that the value of the security is 600
Yes, sir.
and the market price is 500, what you should do? Value is 600,
We
market
should.
is 5.
Yes.
What you should
We
do?
should. We should purchase the security
Buy, you should purchase. Right? That's
because the market
a
price is less.
kind of asset. Why you are buying a pen? Because you feel pen is 10 rupees, but the value is more than 10 rupees.
Yes, sir.
And if you find the value is more, you'll definitely like to invest.
Yes, sir.
Is it not? Why you joined this company's
Yes, sir.
course? Because you felt that price is less, value is more.
Yes, sir.
Okay. So whenever you find that the value is more, price is less, buy. And take the opposite decision when the reverse situation arises. That means value
Yes, sir.
is but price is more. You feel value is 600 but price is 900. So you know if that is the kind of situation, then definitely sooner or later people will realize there is some kind of mispricing. So before that you should sell this. If you sell, you'll be earning profit. Is it not?
Yes, sir. Yes,
Because
sir.
pricing you can say market is artificially prices has gone up. It's a misprice. The price correction will definitely happen. So before that you should sell it off.
Yes, sir.
So therefore the decision guideline is that if the price of security is higher than the intrinsic value, it should be sold. This is because market will
Yes, sir.
later realize its mistake and reduce the price. Therefore,
Yes, sir.
before the market realizes its mistake, one should reap the profit by selling the security. Okay.
Yes, sir.
Therefore, that is the reason why you need to know what is the value. If I know the value, then only I can compare with the price and suitable decision I can take.
Yes, sir.
Okay. Now, to arrive at that,
So, but what is intrinsic value actually?
okay, again at this stage, I'll be telling you intrinsic value. You understand what should be the value. What should be the value of that security that is called as intrinsic value. Or you can say the real worth of the security is called as the intrinsic
Okay, sir. Yes,
value.
sir.
Okay. Keeping in view various aspects, or suppose we are using some valuation models, it may not be there in your syllabus. I will check it out. So we'll be learning. We know how to calculate the value of equity shares. There are some methods are there. How to calculate the bonds or some methods are there. When you apply those models, right? So
Yes,
we
sir.
we come to a particular value. Our point is that that should be the value, but actually value may not be so. Market value might be different.
Yes,
Market
sir.
placing a different value.
Yes, sir.
But through our calculation, we arrive at the value. The value
That who will calculate that? Company.
who calculates? No, the investor calculates.
Okay, sir.
Company may calculate for his own interest. If company wants to know what is the intrinsic value of the shares, then it can calculate. But investor should
Yes,
calculate
sir.
because his investment decisions will be based on intrinsic.
Okay, sir.
Okay.
Yes, sir.
So what is
Yes,
intrinsic
sir.
at this stage? Suppose roughly, can you give me a basic answer or maybe very simplified answer? What do you understand by intrinsic value?
It is defining what is the actual security value of security. What
Actual,
should be the actual value?
actual value means you can say it's an ideal value or what should be the value.
Yes, sir.
Okay.
Yes, sir.
Okay. Right. Now, you see, there are three approaches, I will say, or three uh, techniques are used to compute the value of equity shares or to analyze the uh, securities. Okay. So, objective
Yes,
of
sir.
all this analysis is to arrive at the intrinsic value. We'll be using various models, but by using that, we should be able to arrive at the intrinsic value of the securities. Okay. So, can you broad
Yes, sir.
read it out and tell me what are these three approaches?
Three approaches are the first one is fundamental approach, second is technical approach, and the third one is efficient market theory. And
So,
fundamental
you can
approach,
say these two are main approaches: fundamental approach and
yes,
technical
sir.
approach. Efficient market theory is a different kind of philosophy. We'll be learning that, right? But
Yes,
that
sir.
can also be considered as one of the approach of analyzing securities. Okay. And coming to fundamental analysis, here what happens? Some fundamental things are analyzed to arrive at the intrinsic value. This is
Yes, sir.
this is a kind of three-stage analysis. Three-stage analysis, as you are talking about, what are these three stages? Can you say?
Yes, sir. Economic, industry, and company analysis.
We analyze the economy. Economy, let us say we are planning to invest in a company which is located in India. So we need to understand what is the Indian economy. So various
Yes, sir.
aspects of Indian economy is analyzed. Then we try to find out what is the industry. Suppose this company where you are investing that belong to a pharmaceutical industry, or that belong to the hotel industry, or that belong to the mining industry. So we analyze the situation of that particular industry.
Yes, sir.
Okay, and then we after that only we come to the company analysis. We find out, okay, economic situation is like this, industry situation is like this, but what is the situation with that company itself? So then company specific factors are analyzed at this stage.
Yes, sir.
Okay, this is what happens in fundamental approach. Now, next approach is technical approach. In this approach, what we do so many things, uh, or we several kind of analysis we do, and these analyses are based on mostly charts.
Charts.
Okay, so there are some line
Yes,
charts,
sir.
bar charts, and point and figure charts. We'll be learning all these charts. We'll try to understand the market trade through these charts. So these charts are analyzed. Okay, through this
Yes, sir.
analysis, we try to arrive at the trend. What kind of trend the market is showing?
Yes, sir.
Okay, these are two approaches. The third, efficient market theory is certain kind of belief. Some belief is that there are three kinds of beliefs. You can say weak form, semi-strong form, and strong form. At appropriate time, I will be explaining you that thing. Now, for the timing, let us leave this portion, efficient market theory. Only after completing fundamental approach and technical approach, I will be coming to this part. Okay,
Yes, sir.
right.
Yes, sir.
First, coming to fundamental analysis. Three-stage analysis, three
Yes,
level.
sir.
It's a systematic process, and analysis has to happen in three levels. Economic analysis means you see it's a very broad analysis. Economic is very broad, is it not? And company
Yes,
analysis
sir.
sorry, and inside that what analysis? What is the next analysis?
Industry level analysis.
Is located within economy, is it not? If
Yes,
economy
sir.
is bad, or let us say economy is going down, you can say
Yes, sir.
most of the industries will not show good results. So you can say
Yes, sir.
industry is located, situated within the economy. Okay.
Yes, sir.
With some exceptional industries which may show positive results. Economy is going down, but
Yes, sir.
some industries are growing. Suppose now you see today's right now we are facing this COVID-19 situation.
Yes, sir.
So what is the
Yes,
condition
sir.
of economy you see? It is going down or it is growing,
Yes, sir. It
but
is going down.
it is going down. But you see still some industries. Normally industries, all the industries.
Yes, sir.
But still, if you analyze today, let us say pharmaceutical sector is growing.
Yes, sir. Yes, sir.
Okay, but normally it should not happen.
Yes, sir.
There might be some exceptional industry,
Yes, sir.
but by and large, most of the industries behave in line with economy. Is it not? Okay.
Yes, sir.
Pharmaceutical industries are growing. Let us say healthcare industries are growing. Health insurance sector is
Yes, sir.
growing. Even if the entire economy is going down, some industries are showing fantastic results. And
Yes,
within
sir.
there is a possibility. Let us say we talk about the banking sector. Let us say all banks are doing well, but there might be some bank which is not doing well
Yes,
because
sir.
some company specific factors. Is it not? So blindly we cannot
Yes,
say
sir.
banking sector, banking industry is doing very well. So it's a good investment in any banking company. May not be. So within industry, I have to analyze the company. So company
Yes,
analysis
sir.
is within the boundary of industry analysis. Okay.
Okay, sir. Yes,
Economic
sir.
analysis is quite broad, industry is little narrower, company analysis is very narrow and little analysis. And out of this, what is
Yes, sir.
analysis for here is company analysis because ultimately investment has to be made in company. I'm not investing in
Yes, sir.
I'm not investing in industry. I have to buy
Yes, sir.
the shares or bonds of a
Company, sir.
so industry
Yes, sir.
analysis is more important for us.
Yes, sir.
Which analysis is more
Company.
important? Come.
Company analysis.
Good. Okay. There are various things, various factors. Uh, you can say various components of economic analysis. This is just an example. Let us say, we are showing the trends of Nifty. Okay, how marketing index is going down. Let us say when this India announced lockdown, market was down. Then gradually it picked off when Prime Minister announced some economic packages. Again, market started picking up like that. This is one kind of analysis. Just an example I'm showing you. So you can analyze whether industry by and large, overall all the companies are going off or going down. One can analyze like this. Okay,
Yes, sir.
when we come to the analysis of economy, now we'll be learning in detail what are the factors that is included in the economic analysis. The overall economic environment is analyzed. The demand of products, services, all these things, the trends of all these products, services are analyzed. GDP growth rate is considered. The
Yes,
phase
sir.
of capital market, whether capital market is in bullish phase or bearish phase. Do you know what is bullish phase? What is bearish phase?
Yes, sir. Bearish is indicating the positive result. Sorry, I said wrong. Bearish is showing the negative result, indicates the negative result.
Meaning market is going down.
And yes, sir.
Capital
And
market is going down.
yes, sir.
And
Yes.
bullish means capital market is going up.
Capital performing well. Yes,
Okay.
sir.
Why it is called bullish? Because the investors feel that price will go up, they buy more and more, they make more and more investments.
Yes, sir.
It's such a buying trade. And because of this buying pressure in the market, prices goes up. Everybody
Yes, sir.
to buy. So you call this the bullish space. In bearish space, what happen? Investors think that prices will go down. They try to sell the shares. So there is selling pressure in the market. Because of this selling pressure, prices goes down.
Yes, sir.
Okay. So normally, when economy is growing, every industry should grow, barring few exceptions. Reverse is also true. Just now we are taking an example. Okay, in the economy is going downward, but still some industries are growing.
Yes, sir.
Okay, so how we'll know that whether economy is growing or falling down? Various factors we have to analyze. Okay, GDP is one of them, and we'll be learning few more factors also. Okay, only after understanding this macroeconomic environment and related developments, we'll proceed to analyze industry. Then we'll find out what are the factors which are relevant to the company.
Yes, sir.
We'll continue our analysis like this. Okay.
Yes,
Uh,
sir.
Right. So there are some statistics are there that which factor is important. These are all statistical in nature. You can later on read these things. Okay, now we'll come into these things. Factors that influence economy. So these are only 9 factors I've listed. There are many more factors which affect economy, like population, research, and technology. One by one, we'll quickly go through this thing. Population affects. Suppose in a particular
Yes, sir.
population grows, then hotel industry, let us say residences, service industries, healthcare industry, you see, it will have positive
Yes, sir.
effect on all these industries. Didn't labor intensive industries automatically this is favorable. Population is a population growth is a kind of favorable sign or a favorable will have a kind of favorable impact
Indicator.
economy.
Yes, sir.
Right. Research and technological developments. If the government spends some money on research and technology, that will be also having a good impact on certain industries or some on
Economy.
overall
Yes, sir.
it will have some benefit. Capital formation. Okay. Suppose the situation is like that, capital is formed, property is created, other facilities are provided for. Okay. And if that kind of situation is there, then that also will have some favorable impact on economy.
Economy. Yes, sir.
Natural resources and raw material, their availability. If a particular country raw material, natural resources are available in plenty, so naturally economic situation will
Yes, sir. is better.
Is it? Okay.
Yes, sir.
Now, growth of GDP, gross domestic product, or gross national product. That means the, you can say, value of all goods and services. So if that is growing, that will having also good impact on the economy. Okay, you can read
Yes,
these
sir.
slides later on. So
Yes,
purpose
sir.
and skipping these theoretical aspects. If
Yes,
people
sir.
savings goes off, naturally investment will goes up. It will create a better investment environment. People will like to make investment. Is it not? So that will be also having favorable impact on the economy.
Positive impact. Yes, sir.
Inflation. If inflation is controlled, then also that's a good sign. Slight inflation may be good for the economy also. There will be demand for goods and services.
Yes, sir.
Agriculture is also one of the very important component of the economy. If in a particular economy, agriculture, let us say, in a particular time, agriculture is good, then
Yes, sir.
naturally it has
It is
positive impact on the economy.
good.
There is direct linkage with the economy, right? Then
Yes, sir.
uh, industrial growth, that also has to be considered to understand the economic growth. Government budget, if the government budget is showing deficit or where government wants to make investment, size of the budget, magnitude, whether government is showing surplus or deficit, internal debt or external debt position, balance
Yes,
of
sir.
payment position, tax structure. So all these things affect economy. Okay, here we have listed
Yes, sir.
some of the factors which have favorable impact on economy, some factors which are unfavorable impact on the economy. You can read it later on. Balanced budget is favorable.
Yes, sir.
Okay, a level of debt which can be serviced if the, so which can be serviced means which can be comfortably paid back. Interest can be serviced. That kind of debt is also having
Yes, sir.
favorable impact. Incentives for saving, that these things are having favorable impact on economy. Like this, if you want to know what are the factors that is having positive impact, so on the economy, you have to analyze all components or all these factors. Infrastructure facilities and arrangements, availability of power supply, transportation, communication, they have impact on the economy. Monsoon also plays a role in economy.
Agriculture production.
Uh, People sentiments, whether people are if, people sentiments are positive towards making investment, that has also got an important bearing on economic performance of a country. So these are various things we discussed, which are a part of economic analysis. Okay.
Yes, sir.
Now
Yes,
we
sir.
going to the next level, which is about industry level analysis. Here, what happens? We are
Yes,
making
sir.
analysis not for the entire economy, but for a specific industry. When I say
Industry.
specific industry, we try to see what is the composition of that industry. That means, suppose I am talking about the pharmaceutical industry, I need to know which are the companies are which are the company which forms a
What are
part
the
of
type?
this industry. How many companies are there, and what kind of
Yes, sir.
what is their industry life cycle? Whether it is there in the growth stage or declining stage, I should know. Okay.
Industry development.
So
Yes,
how
sir.
this particular industry is affected by certain happenings. If something happens, let us say now this thing, COVID-19 kind of situation happened. So what impact it is having on this industry? So one should able to understand. So in industry level analysis, all these factors are taken consideration.
Taken care.
Yeah,
Yes, sir.
into consideration or taken care of. Under industry analysis, we classify the industry, some of the units you can say pioneering units. Okay, that means
Yes,
newly
sir.
uh,
Initial stage.
into at that time at the pioneering stage, what happens? Normally, companies make good profit.
Yes, sir.
After that, competition increases. That puts some pressure on the profitability. So ideally, pioneering stage one may make investment, but competition stage one should stabilize the investment. At expansion stage, demand for the product increases, but profitability reduces because so many competitors are there. Finally,
Yes, sir.
saturation stage or stagnation stage, the growth declines. So that is the stage one should stop making investment in those kind of industry, and rather it should one investor should try to disinvestment, try to let us say
Sell the securities.
disinvest his money. Okay,
Yes, sir.
and again
Yes,
the
sir.
analysis we can classify them as a growth industry. Some industry which grow persistently, and it may their growth rate may exceed the growth rate of the economy. So we need to identify
Yes, sir.
whether this industry is a growth industry. When we say industry, what we exactly refer? A group of people or group of company doing a kind of similar activities. That's why we can say IT industry, pharmaceutical industry, hotel industry. That means I'm talking about all such companies in the hotel group. Okay.
Yes, sir.
So it's like this
Okay, sir.
identify growth industry. Similarly, cyclical industries. That means they move closely with the rate of industrial growth of economy and fluctuate cyclically. When economy goes up, these industries also goes up. When economy goes down, these industries also goes down. Defensive industries. These industries move steadily with the economy and decline less than the average decline of the economy. That means the
Yes.
economy goes down, this industry will also go down, but at a lesser rate.
Yes, sir.
And declining industry, it's a category of industry which grows less than the average growth of economy. Okay,
Okay, sir.
that is called declining industry. So that is the time. These are the kind of industries where one should disinvest.
Sir, fluctuate cyclically means?
Fluctuate cycling element. Sometimes it will go up, sometimes it will come down. Okay, sometimes
Okay, sir.
it has a cycle, like a business cycle. There might be some industry cycle. Suppose
Okay, sir.
in mining industry, they know that maybe once in 3 4 years there will be huge demand, right? They will be making huge profit. That is the
Yes, sir.
case. After that, what will happen? There will be competition. Lot of people will
Yes, sir.
be mining units. So it will reduce prices. Because of reduction of prices, it will be difficult to survive. Many companies will close down.
Yes, sir.
Few will survive.
Yes, sir.
They will again start making money. And the cycle will come. Maybe that means this the good period will come. You may say once in 4 5 years. So people with the
Okay, sir.
they know that this is the cycles. Demand will go up, demand will come down. It
Okay,
is
sir.
cyclical industry.
Yes.
Okay, now
Yes, sir.
maybe recession is going on,
Yes, sir.
as going down, but it will again pick up because they know the nature of the industry is like this. It is cyclical. Maybe after
Yes, sir.
years again it will pick up. Right?
Yes, sir.
Okay. Now, industry life cycle analysis. Some industries might be at the pioneering stage, which I was discussing right now. It's a stage of
Yes, sir.
okay.
Initial stage.
There might be competition also. The rapid growth stage.
Yes, sir.
Okay, surviving firms dominate
Yes, sir.
industry. They grow faster, increase the amount of profit. The maturity and stabilization
Yes, sir.
stage. Okay, sales may still be
Yes,
rising,
sir.
but at lower rate. The declining stage. So you have to find out that in the industry where you are planning to make investment, that is in which stage? It is pioneering stage, rapid growth stage, declining stage, maturity or stagnation stage. So one need to find out all this. Okay,
Okay, sir.
are the four parts of the industry life cycle. Pioneering, start from here from bottom, then growth stage, then at a mature stage, then decline.
Mature. Decline. Sir, which stage is more better to invest?
You tell me which stage is more better to invest?
Ye- Yes, sir. Is it growth stage?
Growth stage or pioneering stage? Okay. And in maturity stage,
Yes, sir.
also stabilize your investment. And before declining, you should quit.
Okay, sir.
Okay. Pioneering stage is okay, but risk is also more. Pioneering stage one makes good profit, but risk is more because it's not necessary that all the farms will be successful. Few of them will be successful, few may quit.
Yes, sir. Yes, sir.
Risk is there, but profit is more. The rapid growth stage
Okay, sir.
is relatively better,
Okay,
but
sir.
rapid growth stage indicates that once this stage is over, then maturity stage is coming. Meaning the rate of profit will go down. Profit will be there, but rate of profit will definitely fall.
Okay, sir.
Right. Now, what the question you asked, I'm answering this thing. First of all, exercise caution during pioneering stage. Because why? Because risk is there.
Yes, sir.
You may make investment, but exercise caution. With utmost care, make investment. Then respond quickly and expand your investment in rapid growth stage. Then moderate your investment in stabilization stage. Disinvest sensibly when it signals decline.
Okay.
Right? At
Yes,
decline
sir.
stage, you try to disinvest. Okay?
Yes, sir.
Understood the
Yes, sir.
process?
Yes, sir.
Some other analysis can be done: the structure of industry and the nature of competition, nature and prospects of demand, profitability, technology and research. All these aspects can be researched. When coming to structure of industry and nature of competition, so these aspects we see: how many farms are there, number of farms, and their market share, licensing policy, whether this industry needs a kind of licensing, entry barrier, is there a restriction that whether anybody can enter or there is an entry barrier, pricing,
Yes, sir.
degree of homogeneity or differentiation among products, whether products are more or less similar kind of thing or they are different, competition,
Okay, sir.
yes, all these factors are considered. Okay, coming to nature and prospects of demand, customers and their requirements, determinants of demand, criticality of the demand, expected growth rate in foreseeable future, all these aspects as considered. Profitability aspects like proportion of key cost elements, proportion of raw material, labor, fuel, etc. Productivity of labor, turnover of inventory, basically
Indus.
all these things. Okay, control over prices, inputs. So these factors are considered which affect
Yes, sir.
profitability.
Yes,
Technology
sir.
and research aspects are also considered. Degree of technological stability in that particular industry, whether technology changes frequently or technology is almost stabilized. That means one kind of technology is used. Sometimes you see mobile phones, computer, technology changes.
Yes, sir.
Technology is not stable. So
Yes, sir.
that involves a kind of risk in that those kind of industries. So importance of technological changes. Our research and development expenditure as a percentage of sales, these aspects are seen. Okay, so these are the you can say components of industry analysis. Now, after
Yes, sir.
analysis, we will be entering into company analysis, which is most important analysis. Here we see the company specific information.
Yes, sir.
We collect this information through internal sources as well as external sources.
Yes, sir.
Please, financial statements are helpful. Financial statement is balance sheet, statement of profit and loss, cash flow.
Cash flow statement.
Right? We analyze all these things. Quarterly reports, if it is a listed company, then quarterly published data is available. We see that thing. Annual reports, here also company publishes statement, income statement, balance sheet, cash flow. So here in detail, we make detailed analysis of all these things. Whether profits are correct,
Yes, sir.
whether financial statements are correct, are they comparable with the industry? So all these aspects are considered because ultimately investment has to be made in the company. From
Company.
external sources, all informations are collected. Okay, external sources like
Yes, sir.
what kind of credit rating these companies having. So other sources one can collect data. Okay, and to make this company analysis, there are we can say two techniques we will be referring to. One is traditional techniques. Second is modern techniques. Under traditional techniques, what will happen? We try to forecast the expected dividend and earnings. That means we find out what will the future earnings of the company. We try to forecast. Suppose we are here today, after 1 year, what will be the dividend? After 2 years, in the second year, what will be the dividend? Third year, what will be the earning? Like earning and dividends are forecasted, right? By making use of
Yes, sir.
company's price earning ratio and
Yes, sir.
information, we try to forecast that. Then we discount this dividend or discount that earning to arrive at the value. If this will be the earning in future, what will the value right now? So this is the kind of
Yes, sir.
analysis we do. to arrive at an
Yes, sir.
in case of company analysis.
Present value.
Okay,
Yes,
we
sir.
call it the traditional method. Coming to modern method, we use some methods like regression analysis. Here, what we'll do, we'll find out some variables which affect the value. We can say some variables are dependent, some variables are independent. Okay,
Yes, sir.
by analyzing these
Yes, sir.
values, or you can say these factors. So these are the factors which are responsible to bring changes in the value. So we analyzes this is all these values, all these factors on, and by applying regression analysis model, we try to arrive at the value. We also do some kind of trend and correlation analysis. This value is correlated to what other factors we try to find it out. Decision tree analysis, where you find out various possibilities. There is possibility A, possibility B. If A happens, then again further possibilities are like this. So we think of various possibilities and various decisions are possible. Various possible decisions are considered. On that basis, we try to arrive at the value of the value of the
Company.
company
Value.
means
Yes, sir.
if the company you can say, but ultimately
Share of the company.
we'll be arriving at the value of the equity shares or
Share.
yeah.
Yes, sir. Security.
Okay. Now
Yes, sir.
Okay, now coming to fundamental analysis tools, there are some tools are used in this kind of fundamental analysis. One is earning per share method called as EPS. We calculate earning per share. Then price earning ratio, that is
P
one
by E ratio.
which helps us to make company analysis. Projected earning growth, that's one more calculation. Price to sales ratio. Price to sales is market capitalization divided by company's total sales or revenue
Okay, sir.
12 months. This ratio is also computed. Price to book, that is company stock price divided by book value per share.
Book value.
Dividend
Yes, sir.
dividend earning, dividend payout ratio, book value per share, return on equity. Okay,
Yes, sir.
so all these things are used as a tool to make fundamental analysis.
Yes, sir.
Okay, now uh, how to use this analysis? Let us say I'll be one by one. We'll be seeing it. There might be some qualitative analysis like this availability of the infrastructure, availability of cost, order book positions, product risk, market distribution, fixed cost, variable cost, quality of personnel, quality of these are things are part of the qualitative analysis. There might be some quantitative analysis which are also a part of equity analysis or as a part of
Finance.
uh,
Fundamental analysis.
fundamental analysis.
Fundamental analysis.
Now, what these tools I told you, like dividend distribution models, dividend discounted models, price earning methods. Okay, all these things I'll be explaining you in your next class. Today time will not permit us to do that thing. So we'll stop here. Next class I'll be explaining you these methods. Then then only we'll be learning we'll be entering into the technical analysis part.
Okay, sir.
Okay.
Yes, sir.
Okay. So
Yes, sir.
stop here now. So any query
Okay,
you
sir.
have?
No, sir.
Okay. So next class, what we will do? These techniques we will be learning. Now theoretical part almost over. So these techniques, like all these ratio calculations we will see. These formulas we'll see, and if possible, we'll try to practice those things. And only that is
Okay, sir.
when that is over, we'll be entering into the technical analysis part. So it will take few more classes to complete this particular
Yes,
part.
sir.
Okay.
Yes, sir.
So we'll stop here. Thank you very much.
Yes,
Any
sir.
query you have before I leave? If
No,
have any query, then let me know.
no, sir.
Okay. Then thanks a lot.
Thank you, sir.
Thank you.